What is going on, investors? Hopefully you guys are having a great day out there. Time to talk about a Walmart Incorporated, which just reported their Q1 earnings today before the bell. On today's video, we'll look at these earnings. We'll take a look at the revenue, the cost, the profit, the balance sheet, the cash flows. We'll take a look at it all on today's video. I'll walk you through all these numbers. We're also going to take a look at the stock chart over at Walmart. This thing was in a downtrend for a while, really broke down, hit some key levels of support that we've actually had marked out for a while, but has rallied back hard and is in a really interesting spot. I like where Walmart is from a financial perspective. Now, speaking of finances, I'll tell you what, they came out with their Q1 results today and everything's looking really strong, especially at Sam's Club. They ended the quarter with the most total member count at Sam's Club ever. And so things are looking good. That is a nice little recurring business for them, kind of a la Costco. Now, speaking of Costco and Target here, we're going to take just a look really quickly at just a valuation, just your traditional valuation metrics in terms of this one. So I'm going to compare Walmart here in the orange line, Costco's the blue line, Target is this purple line. And we see here, this is price to sales. Walmart trades at a fraction times sales, only 0.7 times sales. Costco trades almost about 1 time sales, and Target trades a shade over 1 time sales. So from a sales basis, Walmart actually trails its peers. Now, in terms of price to earnings, this is trailing 12 months, and it is from a gap perspective as well. Walmart actually sits right in the middle, trading at about 29 times PE. Costco's trading at about 39 times, and Target, interesting enough, investors pay up for their sales, but don't necessarily have to pay up for their earnings. They're trading about 24 times in terms of earnings. Now, let's jump over the numbers. This is the most important stuff. We've got our revenues here on this top line. This is our 3-month ended. This is 2020 in the right-hand column, or in the middle column, excuse me, and the left-hand column is our most recent year, and we got a percent change as well. Net sales, okay, with Walmart, you're not getting that explosive kind of top-line growth that you might see at an Amazon, or maybe even potentially at maybe like a Target or something like that. You're seeing just steady growth, okay? 2.6%. You went from $133 billion up to $137 billion in terms of net sales. So now here's our membership and other revenue. Some of this is Sam's Club. You see here, wow, up 21% from $950 million up to $1.1 billion. So they cracked that $1 billion mark on that membership and kind of other revenue. That's super solid. Total revenues coming in up 2.7%, 134 up to 138. Again, you're not going to blow your doors off with these types of explosive growth, but you are collecting a little bit of a dividend on this one, about $2.20 per share from a forward PE basis. You're in the mid-20s. So all things being considered, you're buying a very, very steady performing company. Now, in terms of cost, you like to see these stay in line, and they did. Cost of sales up only 1.2%. So it's showing you, I think some of the worry with Walmart and a lot of retailers out there is kind of this like inflation. So it's been talked about a lot, somewhat out here on our channel here on the investor channel, but across all of Wall Street and the investment community is a lot of people are talking about inflation. And I would say for Walmart, I wouldn't worry too much about, product cost inflation. Okay. That is something that is going to happen naturally, and it could be something that is temporary. I think what I would worry about from a Walmart perspective is actually like this operating, selling, general, administrative. Okay, it's like employee salaries. If Walmart all of a sudden had to start paying their employees more because of wage inflation, I think that's something that would negatively hurt a Walmart more than other businesses out there, especially ones that don't rely on, hard labor, that kind of that hourly labor, that if the price of that got inflated, then it certainly would impact Walmart. So just a little bit of side tangent there, just something to think about when you're thinking about these companies, although we're seeing cost here just stay well within line. From an operating income perspective, it's actually fantastic. You ticked up 32% on the operating side from $5.2 billion up to $6.9 billion. Again, you only grew your revenues 2.7%, but you grew your operating income by 32%. Seems pretty nice to me. Debt actually came in at 400. This is interest on the debt, and so that actually went down. You like to see that. And finance lease obligations basically flat, and you've got your interest income. This is money that they make on essentially cash kind of sitting in the bank that went down a little bit. All things being considered, you kind of come down here to an income from income before taxes. It got blown up. I think they divested out of a couple businesses, and unfortunately, I think they had to take a loss on that. And so you see that their net income came in at 3.8 billion when the last quarter was at 5.4. So in these scenarios, what I do and what I typically do is I evaluate companies based on this operating income, okay? So it's up 32% operating the business. Yeah, you're going to maybe make some bad investments. Yeah, you might have to take a loss on certain things. So that is going to impact your net income coming down here, okay? Their net income went down 31%. So this is going to affect your PE ratios and those types of things, but I think as an investor, we can stop right here at operating income. Okay, you got your revenue, you got your cost, you can factor in this debt service and stuff like that, but it's basically a rounding error. All things being considered, I'm very, very, very encouraged what's going over at Walmart, at least from an operating perspective. Now, in terms of balance sheet, as you'd expect, this company looks really, really nice. We've got our cash and cash equivalents year over year ticking up very nice, and even back from January ticking up quite a bit. They've got some receivables as well. What I noticed here was inventory. Okay, inventory ticked up to 46 billion. We were at call that 45 at the beginning of the year. You're at 41 last year. So inventory's ticking up. Could say a few different things. I think number one is maybe there's just not demand there. Back in April, people like Walmart was one of the few stores that were open back in April of 2020. Walmart was, a lot of stores were closed. A lot of people were forced to go to Walmart, so they kind of drew down on this inventory. So it could be that this 46 billion is kind of where you'd be with Walmart. But I also think if you had inflation and you had a lot of demand, people inflation encourages people to spend their dollars and kind of get rid of them. That's what drives the price of things up. And so I would actually expect Walmart's inventory to be ticking down if you saw that type of environment. And so that's just some small things that you can read as you're moving through this. So total assets ticked down a little bit from the beginning of the year, but from last year, essentially flat or just kind of flat. And so you got your long-term debt over here at Walmart. Again, we're moving in the right direction on that, okay? Not that this company, they borrow money so cheap, it's not something that I would really, really be concerned about. You got $40 billion, you had 43 last year, and you had 41 at the beginning of the year. In terms of long-term debt due over the next year, you got about $3.5 billion. Again, that is moving in the right direction if you take a look at that. Now, from cash flow perspective, again, kind of paints not the best story. Okay, we pulled down that net income number. That's kind of ugly, and it still impacts our net cash provided by these operating activities. It came in at $2.8 billion, and you were at $7 billion in the previous year. Again, most of it is this unrealized losses on some assets that they had that they disposed of over the last year. So all things being considered from a cash flow perspective, net income perspective, not that great. Operating perspective, I think that's what investors are paying attention to. You see the stock is up 2%, heading into today. And then when we get over to the stock chart, the stock has really been performing well. I think investors are really focusing on that operating income, the Sam Club's membership, those types of things before they get kind of tied up into declining cash flows, declining net income, things of that nature. Now, cash flows from investing activities, they invested a little bit more in plant and property equipment over the last year, ticked up nicely. This is proceeds from disposal of certain operations, and so they ended up cashing in big here, about $7.9 billion. That gave us a positive investing activity cash flow of $5.8 billion, so it more than makes up for the decline that we saw here. Now, from a financing activities, they've repurchasing some stock, so you've got a buyback going on, and it looked like they accelerated it quite a bit in the quarter. And so that's kind of good to see if you're a shareholder as well, and you've got these dividend paid as well, and they're making these repayments on the long-term debt. all things being considered from a cash flow perspective, looking pretty nice from Walmart. Now, what's also looking pretty nice is this stock chart. So we were in actually a pretty defined downtrend. We made a high back here in early December. We're actually right at the 1st of December. This stock peaked out at about 153. Like a lot of stocks started sliding, and boy, this one really slid all the way into an area of demand down here at about $130 per share, and has bounced hard, okay? Bounced up here, and we actually broke above another level where I have marked out here at 139. Once we broke above 139, boy, that was the catapult to kind of send us up in here to the 140 range on this stock. I like the trend on this one. Our moving average has started to turn positive. We've broken through an area of resistance here at 139. That should act as a level of support as well. Now we're looking to close above about 147 on this one, about $5 more. You get up about $3, $4, $5 more on this stock. I think these all-time highs are back in play on this one at 153. Again, the entire market would need to continue its momentum. We'd also need inflation and those kind of fears to kind of tamp down a little bit, because as we discussed earlier, Walmart from a labor perspective would be very, very exposed to wage inflation. But if the product cost, they can pass those through to the consumer without having to pay their workers more. That's not necessarily your textbook version of inflation, and Walmart could easily get away kind of skating by with free colors there. So hopefully you guys enjoyed this video on Walmart. Just a steady performer over the last year, up 10%. This year, I see here down 3%. That's probably not including the gain that we have today. So essentially flat on the year. You're buying this one just for kind of the steadiness of it, okay? Can you make it a cornerstone of your portfolio? Maybe not, especially if you're looking for growth or you're a younger investor, you're looking for that kind of accelerated growth. Walmart's not going to give it to you, but in my opinion, the way I've constructed my portfolio is I've got exposure to Amazon and Walmart, and that gives you a ton of exposure to kind of e-commerce and that e-commerce spend that you see here at least in the United States. So hopefully you guys enjoyed this video. I'll be back with more again very soon. Good luck with your investments.